Happy National Day! Today I've got Byron joining us for the next installment of How I Started Investing. Click subscribe to stay updated to more interviews like this. The flag covered you.
Dude, keep that one.
We bring different guests to our channel to hear different perspectives, to learn and be inspired by their views. Today, I have Byron in a continuing episode of the series How I Started Investing. Byron, what should the audience know about you?
Sure. Well, I'm currently Executive Director and Head of Legal Compliance for an international hedge fund, but don't let that scare you. I'm not here to talk shop at all. I'm here to talk about investments and exactly what people like you, viewers like you, can do to help secure your own financial viewers with one of Singapore's top financial influencers and great stars, Daren.
Let's begin by hearing how did your investing journey start?
My investment journey, I'll be perfectly honest with you, was really dumb. I started investing back in 2009. I just got my first public service job, nearly graduated university. So I put all of my money into basically what I thought, stuff that I would use every day. So anyone who knows me, I'm a huge fan of big tech companies, and I'm a huge fan of, especially since 2008, the big banks. Because I know a lot of people think banks are boring, but banks never lose. So with respect to companies like big tech, I got started on stocks like Amazon, Google, Microsoft. In this day and age, I wish I invested in companies like AMD and things like that, and a lot of the smaller tech companies. But I started off with big tech. I defeated every rule that the seasoned campaigners around 2008 were telling me. Invest in blue chip, invest in equities, have a diversified portfolio. My portfolio was 100% tech, and pretty much, still is, aside from some of the big banks, mostly in tech. So my investment was initially in companies like, I know you're a big fan of Apple. I absolutely, I'll tell everyone, I love Apple stock. Their iPhones have, innovated and transformed a lot of things. They've outperformed and taken over things like the Walkman. They've made calendars useless. They've disrupted the whole bank telling industry. Everyone watches things on their phones these days. You don't use a VCR. Frankly, you don't even use iPods these days. Everything's on your iPhone these days. I'm a big fan of companies like Microsoft. Anyone who has a LinkedIn profile, anyone who does programming on GitHub, anyone who plays video games, frankly, these days, is probably going to be playing a product of Microsoft. I also hold shares in companies, and I still have my original shares in companies like Google. They absolutely run the search engine, which is where everyone goes whenever you need to know something these days, and they're one of the largest advertisers globally. So my investment journey has been and continues to be products that I use every day. I know I also use products of things like, if you're in Singapore, products like DBS, Sheng Siong. Yes, I use those products. Yes, I go to Vivo City. Yes, I maybe should invest a little bit in Mapletree, but they don't excite me so much. So, whenever I like to invest in companies that I'm passionate about, much like you, and that frankly make me excited and keep me convinced to keep holding the company. So being able to invest in tech companies that you had a strong feeling in, and that also did very well during that time, was an absolutely exhilarating experience. Now, I know I've talked a lot about a lot of successes. I want to let you know that, like many other viewers out there, I wasn't successful all the time. I invested in a lot of companies that didn't do so well. Activision Blizzard, was a company that even in 2018 went from $80 to about $40. I remember in 2018 I nearly got wiped out because I was trying to buy the dip, but it kept on dipping. Amazon went from, I think, around there, split adjusted, $100 to about 60 plus split adjusted. So, I've been a loser myself. I still have shares in Intel. I have shares in C Limited, which owns Shopee, which many local Singaporeans here would probably use. So, most of them succeed, but, much like any other investor, they don't always succeed. But, what keeps you calm, what keeps you happy is investing in companies that are doing well, kicking goals, are growing, and that ultimately, the most important thing, have conviction in.
There has been an explosion of retail investors in the past 2.5 years. during COVID. You started your investing journey in 2008, the global financial crisis. Many argue that it was a much tougher time than it is today. How did that shape your investing philosophy?
There was a lot of volatility. So when you deal with volatility, much like in the past, 7, 8 months, like many of us, you open your portfolio on a daily basis and you get punched in the face. The next day, after getting punched in the face, you're like, okay, is there some green? Is there some green? You open your portfolio, red, punched in the face. And every day it seems like a ritual. I get up, I brush my teeth, I have breakfast, open my portfolio, get punched in the face. If it's not punched in the face by my portfolio, it's by my wife. So either way, I lose. But I think, over the past few months, it has been incredibly volatile. And we see a lot of the similar patterns that we saw back in 2008 and even in 2018, late 2018, when we had that big market swing in December and then that big rebound in January. And what a lot of people will know is that it's much like what the great investor Peter Lynch once said, and that is time in the market is better than time in the market. But I think we've even seen that recently. We've had a lot of drawdown months. We've got 2022 off to a terrible start of the year. The Nasdaq down, huge amounts, and growth stocks down even more. But what have we seen in July? It's been an absolute bumper month. I mean, if you had sold in July, if you had capitulated, you would have missed out on some of the great, 4-5% days recently. And growth stocks going up by, 10, 15, some of them even 20% or more in a single day. So it just shows that no one can time the market. And knowing that you cannot time the market, it's best to just keep the money inside because yes, there will be down days, but there's also going to be very, very furious up days. So experiencing the volatility in 2009, there was still a little bit of it, but mainly the volatility that I experienced in 2018 and also to a certain extent in early 2020 has shaped me to know that there is going to be volatility. It's going to be a very wild bull. It's going to have a colder heart than your ex-girlfriend. And just understand that with big down days, which occur over several months, there are usually very furious rallies. And if you miss those few good days, your returns for the rest of the year are going to suffer greatly.
It sounds like there's one big lesson from Peter Lynch here. Timing market beats timing the market. Who or what influenced you? Because when you started your investing journey, Tesla wasn't even a public company yet. Tesla IPO'd in 2010, 12 years ago. So you've had many years to really shape your investment views. Different people come in, you tried certain things.
Yes. So when I started initially in 2009, it was very much long only. I even used margin. You had a number of events like the Greek crisis, the EU crisis, things like that, where I tried to buy the bonds and I got wiped out. So it taught me that don't use margin, or if you use margin, be very understanding that it works both ways. So really what sort of shaped my investment philosophy was volatility and going through it and seeing your real money going through that volatility, both in the good times as well as the bad times. And so what that has taught me, and I will admit, I have traded a little bit during it, but I can tell you that every single time that I have tried trading 10% of my portfolio, 20% of my portfolio, it has always led to me consistently selling the bottom and then buying back the top. I should, almost create a Twitter account where I list out what trades I do so that everyone can do the opposite and make some money. So, especially over the past, 6 to 8 months, it's really highlighted to me the importance of having conviction. When you see red day after day, what has kept me invested and therefore taken advantage of a lot of the updates, significant updates that we've had recently, it's basically been conviction. Being able to pick stocks that you love, that you're passionate about, that you know how they work, you use their products on a daily basis, they have great teams managing, that's an important thing, and being able to understand that when the market goes down, you got more shares because you've done a lot of research in it. I first invested in Tesla a little bit in 2019, just prior to COVID, as well as a little bit after COVID. So I've been through the huge roller coaster ride. There was a lot of what they call FUD, fear, uncertainty, and doubt surrounding Tesla. Tesla's going on fire, FSD leading to people crashing behind emergency vehicles, and I'm a big follower of Zero Hedge. So Zero Hedge, had article after article talking about how unreliable Teslas were, how it's close to bankruptcy, how the cars, can bust on fire, and how, listening to so-called Wall Street analysts like, Mr. Johnson, who says that Tesla loses money with every single car that they sell, and the problem is that people like me tend to listen to it, but because these people are supposed to be respectable, but it's through building your own conviction, doing your own research, and I wasn't really following Steve and Mark Ryan around this time, but I had to do my own research on the company and look at their investor reports and look at what they were doing, and they were disrupting an entire automotive industry, moving away from vehicles like gasoline to EVs, which is absolutely phenomenal, and it's such a fantastic thing. That's one of the reasons why I invested in it. You have this once in a generation entrepreneur like Elon Musk being able to solve problems and achieve results. I'm an investor in SpaceX. So Singaporeans and people around the world are able to invest in private companies such as SpaceX. If you're in Singapore, shares of SpaceX are available either through an SPV or through other fund managers. But you do need to be an accredited investor. One of the favorite platforms that I use is Moonfair. I can't talk about which products I specifically use with those platforms, but I'll leave some details with Daren.
Now, I'll hold you there. SPV, can you share the audience what it means, especially for newer investors?
Sure. An SPV stands for Special Purpose Vehicle. Normally, what happens, if you think about buying SpaceX shares, there's only really one way to get them, and that is through, frankly, either buying it from someone else or buying it directly from the employees who sell every 6 months. So one of the ways that fund managers like to earn a bit of money as well as structure these products is by getting all the SpaceX shares that people want to sell them, or from the employees themselves, and put them into a bucket called an SPV. Normally, it's a company in the Cayman Islands, and then the fund manager will then sell slices of this bucket to people like you and me, if you're accredited, and can manage to get a slice. And it's through that way that you own ownership. You don't go on the SpaceX register as a direct employee. The SPV becomes the shareholder, but you're able to get a share of it through the SPV, which makes it easily tradable. And the fund manager that gets the shares for you can earn some commission. And if you decide to sell it, the sale process is very easy because you're selling shares in the SPV. You're not selling the actual shares in SpaceX.
These are not available to all normal retail investors. As Byron mentioned, you need to be an accredited investor. In Singapore, there are two criteria. One is you have $1 million in financial assets, like stocks or any other form of assets. Or second, you've got an annual income of 350,000 Singapore dollars. So if you can prove either one, you become an accredited investor and you can start investing in some of these different assets. We've heard about public equity stocks, we've heard about private equity, like investing in SpaceX. What about other investments in your life? Where does crypto, property, bonds, everything else come in?
All of those assets I don't invest in because I don't have conviction. Real estate, I do have some experience in real estate in Australia, and I've seen other people who have succeeded tremendously in real estate. I know there's a lot of uncles and aunties who love to talk about real estate in Singapore. I think in Singapore in particular, real estate is one of the best ways. I know, I'm a big stock bull, I'm a huge SpaceX Tesla fan, but to be perfectly honest, real estate, mainly due to the amount of leverage you can get, borrow money from the banks, and the fact that everyone needs a place to live, real estate is probably the best way to make money and generate racial change in wealth. But many people don't have the money to buy two houses, especially in Singapore, where each additional house you buy, you canard more stamp duty, and when you canard more stamp duty, it means your cost basis goes up. So it's a very attractive investment. Anyone who has the money to do so, I would say, definitely invest in real estate. Some methods I've heard are people, that buy a condo They lease out the condo, but they stay in their BTO. Something like that. Or one partner buys a condo, one buys a HDB, then they magically get married, and they're able to work things out that way. In terms of crypto, NFTs, and things like that, yes, I do acknowledge a lot of people have made significant life-changing money on it, but I personally believe, and this is a personal opinion, is that it's basically just a huge pyramid scheme. The value of cryptocurrency or an NFT depends on who buys it next, and you have to hope that it's like the greater sucker theory, that the next person that you sell it to is willing to pay a price higher than what you paid for it. Oftentimes, this is not the case, especially if it doesn't have a great management team, doesn't have fundamental value. Frankly, cryptocurrency has no value. Its value is derived from the value that others give it. And this is where I want to especially warn some of your viewers about NFTs. Yes, I know some people have made a lot of money in it, but the problem is that these NFTs, the value of it depends on the market value. How do you get the market value? The market value is generally the price that the last person paid for it. Well, as we know, cryptocurrency is generally quite anonymous. So how do you know that the last person that bought it for this high price was in fact a genuine buy or sale transaction? How do you know it's not a friend or relative? They're like bidding up the value of it to make it look appealing. You don't know that. Cryptocurrency is not subject to the same amount of oversight, disclosures, and regulation that public stocks are. So be very careful. I personally think it's a pyramid scheme. It's a Ponzi scheme. I know people have made a lot of money, but other people say that NFTs are like a form of art. Art doesn't have any value, but people buy shares in art, or they buy whole pieces of art. So I'm not an authority on it. That's just my personal view as to why I haven't invested in it. Yes, I have a little bit of Bitcoin, but that's because I know everyone uses Bitcoin. And if worst comes to worst, I can probably go somewhere and sell it.
The takeaway here is there are many forms of investment. I've got friends who buy Rolex watches, Hermes bags, and they find a way to make appreciation or even rare whiskey.
Yeah.
What's important, as Byron mentioned, is you've got conviction in it, you believe in it, and ideally, you're a user of the products. So Byron uses many of the companies that he invests in as a gamer or just as a consumer himself. What's your biggest learning in all these years of investing?
The biggest learning would have to be conviction. We all understand that the stock market goes up and down. We've all been through a very rough several months over the past few months. It has been a terrible start of the year. And any viewer who has bought in the post-COVID surge, where the Federal Reserve was pumping the global market full of money, the stock market was going up, you were making a lot of money, and suddenly the past few months you've been seeing significant wealth depreciation. I just want to let you know that we're all there to a certain extent. We all feel the pain. We all wake up in the morning to get punched in the face and see red. So you're not alone. But I think one of the greatest things that you can do throughout this time is by understanding which companies you pick, why you pick them, what products you use, are they still in demand? And when you see red days over the past few months, you understand that these are great companies, like Tesla, significant position I hold. It's a company that just kicks goals. Sometimes it can fall up to 3, 4, 5% in a single day. But do I bat an eyelid? No, because I don't view it as a money-making tool in the short term. I view Tesla stock as just Tesla shares, my ownership in the company. And what is the company doing? Well, they recently said they're potentially opening up a new gigafactory. They're doing a stock split. They're beating record after record in terms of maintaining profit margins, in terms of growing sales, increasing manufacturing capacity. In fact, they were one of the great companies that was able to navigate the chip shortage of 2020 and 2021. Which other company can you say has been able to do that? So why you would sell Tesla stock is absolutely beyond me. And that applies to other stocks I hold, Nvidia, Amazon, Google, Microsoft. These are companies that are leading the charge in innovation. I see their products being used. Yeah, ad revenue is a little bit down lately, but by and large, they're owned and operated by great CEOs. Nvidia, Mr. Jensen Huang, he's been able to absolutely take Nvidia to new heights after new heights after new heights. And yes, the stock has fallen from around $300 to at the time of this filming, approximately 180, 190. Um, should you care? No. And the reason being is the company is kicking goals. It's achieving records. It's continuing to grow. It has a great management team. In my personal opinion, and I'm not a financial advisor, everyone's got a different financial situation. But one of the biggest takeaways that I can sort of give to people is understand the company you invest in. Be passionate. That's what I said earlier. Be passionate about the company that you invest in. If you're a gamer, invest in NVIDIA, invest in Microsoft. These are great companies. Generally try to stick to the big cap stocks because they tend to attract the best engineers, the best talent, and have the best management teams. They tend to be blue chip in a certain way, but they have great growth trajectories. Heck, Amazon's gone up 40% over the past month. So it just shows that, if you're like, fund managers like Tiger Global who sell at the bottom, you lose all the way down and then sell at the bottom, or like Captain Wood did with Coinbase. The market is an unpredictable beast. If you sell out and capitulate, or decide that stock investing is not for you because you've had a paper loss, well, you need to reassess that. As we've seen, the market is very volatile. You go up a lot, you go down a lot, and as quickly as it goes down, you go up even further. So, don't be one of those people where you see some temporary losses and start selling. I'm not a financial advisor. I can't tell you whether or not you should be doing any of this. But in my experience, what I've seen, I've been through 2009, a good part mainly. I've been through the late 2018 crash. I've been through the COVID crash. And all I can say is that, and to practice my Singlish here, even if you were a sway one and you cannot buy shares at just before the GFC or just before the COVID crash, and you say, I sold sway, right now, if you still held onto those stocks, you'd be up massive.
Great effort. Byron's been here for 6 years, so one language we all pick up is a little bit of Singlish over time. I want to ask you, how do you put into practice your conviction? For many investors, they have to decide between concentration and diversification. Where do you stand right now?
I stand on diversification for sure. I know there are a lot of people, and it goes against conviction. You say you have conviction, well then you should entirely invest like one stock like Tesla or Microsoft. But I'm a big fan of diversification for the reason being is that it helps you sleep at night, and it helps you to explain to your wife why your portfolio isn't going down as much as others. It might not be going up as others, but it's not going down as much as others. So being able to diversify, I think, is a very good thing to do. But again, stick to conviction. Diversification, I hold some shares in stocks like JP Morgan and DBS. Why? Because they have the world's best management teams. DBS is Singapore's largest bank. It's a very well-run bank. JP Morgan, I say the exact same thing. It is an absolutely phenomenal team, still run by Jamie Dimon. He's absolutely the best. Working in the financial industry myself, I work with a lot of people that work at JP Morgan and Goldman Sachs, and they're absolutely incredibly intelligent, very bright people. They know how to make money. And as we see time after time, banks never lose. So especially if you're a new or starting out investor, I would say diversify yourself. If you don't know where to put money, or you're too scared to put it all in on Tesla, then invest in indices like the S&P 500 at any time, even if you're hurting right now, even if you want to press the sell button right now and get out of this market because you've seen big drawdowns. In my personal opinion, don't get out of the market. Maybe invest in the S&P 500 index, maybe invest in the NASDAQ, heck, even the Dow Jones if you need to. But don't be one of those people where buy high and sell low, because as the stock market has shown time after time, the stock market always goes up. Stocks always go up over time.
For a long-term horizon, especially if you look at the S&P 500 over 70 years, it generally trends up. And if there's something really major in the world that happens, we've got bigger problems to worry about than stock prices.
Exactly. And I guess one of the greatest lessons I can sort of impart on people is that in the few times that I have tried to stock trade, I've lost. I've sold at the bottom and bought at the top. I quite like what Chicken Singapore does. You have a 80%, don't touch portfolio, and a smaller, let's say 20% itchy fingers portfolio. That might work for some people. But for me, myself, you focus on a few key stocks that you like, do research on them, listen to great influencers who are able to explain why these companies are great in simple language. Read earnings reports if you have time. Spend less time watching the share price and more time understanding the company you're invested in and the management team that runs it.
Thank you for sharing your perspective, your stories, and also just your journey as an investor overall these years.
Great. Thanks a lot for having me, Daren, and thanks a lot for listening.
Investing isn't one way to do it, right? There are many paths to succeed. It doesn't need to be stocks as well. It could be anything that you have conviction in. And what's also important beneath all of this is that you have the right mental health, you have the right peace of mind as well, that you can be present to your loved ones, to your family. Because the opportunity cost of spending 3, 4, 5 hours a day looking at stocks, looking at prices, that's time that you'll never get back. So investing is important, but it's not the only thing in life. If you found this video useful, please click the like button, hit subscribe to stay updated to more interviews like this. Take care everyone. Happy National Day.